we know you're a very technical trader,
Right.
and your VWAP, we hear it mentioned all the time. But before we go into your trading style and your, the way you approach the markets, how much do you pay attention to fundamentals?
I like to be aware of what shapes the psychology of the chart. So I'm interested in the headlines. So, each morning around this time, this is when I kind of go through my bunch of emails with all the headlines, and I like to see what's shaping the psychology of the market. So, I actually, Joel, it's interesting that I've said this before, that I view fundamentals and technicals kind of the same. Is that it just tells us what to be aware of. So, I'll be interested in a chart's fundamentals, not because I care about the fundamentals, but when I see strong growth in revenues and earnings, I know that that brings about a large group of participants who does care about that. So it makes me look at the chart and say, well, is it backed up here? Just the same as, when I see a stock pull back to the VWAP, I'm interested in the stock, but I'm not going to buy it just because it's touching some, magic number based on the volume weighted average price. So it all comes down to just kind of, like I said, shaping the psychology and being aware of what other people are looking at. China, for instance, but I don't like to trade those stocks because they're just so gappy.
Yeah.
And
That's the problem. It's like a headline comes out from, and again, geopolitical headlines don't have to be war. There's sometimes something else too, where they just harpoon their own companies sometimes too. So there's a lot of overnight risk there too. Brian, I want to talk about and I've learned a lot from you just following you on Twitter. And one thing I always catch myself doing is when I'm trying to be a hero and, buy that stock's going straight down because it's going cheap. I remember you always say, don't buy stocks in downtrends. He always screams that out. And I always think of Brian Shannon yelling over me, don't do it. Like I was looking even at Bristol Myers yesterday. I'm like, man, this stock's getting cheap. And then I think about Brian. I'm like, don't buy stocks in downtrends. So, I mean, when do you look obviously, stocks don't downtrend forever. At what point in time, do you look at a stock that's been beaten up and then it starts to trend up? When is the downtrend actually broken? On what time frame are you looking?
Well, so regardless of time frame, it's kind of all the same. It's just that, back to Stan Weinstein's stage analysis really is the way I learned it, which was Wyckoff. But when you look at Bristol Myers, for instance, it's below a declining 200-day moving average. So to me, that just means it's toxic. I'm going to stay away from it. There's no need to be involved. I love the phrase, Dennis, if they don't scare you out, they'll wear you out.
Ooh,
And
wow.
if you look at
right,
even like if you look at the Nasdaq, or whatever you want, I mean, from the 2021 high, there was no reason to buy until it was basically February, March, when we had that 200-day moving average start to flatten out. February, March of 23, that is. And that's when this huge rally emerged from. And we're still above that rising 200-day moving average. So just the same, I'm not going to short this market just because I think it's up too much or, on that time frame. You can do the same type of analysis on a 1-minute chart if you want, and go in there and be a lunatic and find shorts all day if that's your time frame. But to me, it's about marrying the time frames and knowing that the larger time frame is, in Bristol Myers, is still in a downtrend. So I'd rather look to that stock and say, it just bounced 10% to the declining 20-day moving average. It's starting to roll over on the shorter term time frame. So now I'm going to short this stock. That's the way I look at it.
when you're sitting at the Brian Shannon desk right now and you're looking at your charts, how many different, like, what time frames do you have? Like, we have the 30-minute because we like the pre-market, we like the after hours and the pre-market action. Dailies are very important. They don't reflect that. They give you more of a, you know, less price action, but more stable. And then the monthlies. What time frames do you look at?
Great question. I have on my screen right in front of me, I have 4 time frames. And those 4 time frames are just like yours. I, hit the symbol and they all populate. So I've got a daily, a 65-minute, a 30-minute, a 10-minute. And then in my upper screen where I don't always look, I have a weekly time frame. And in the bottom right, just to the side of it, I have a 2-minute time frame.
Oh,
I fine tune that stuff. So
why the 65 versus the 60?
great question. You have a much feel about that? The market's open from 9:30 to 4. So if we look at that and you look at your hourly time frame, you've got 7 candles or bars. One of those is 30 minutes long. 6 of those are 60 minutes long. So you've got 1 apple and you've got 6 oranges. If you put any, moving average, any stochastic, any type of study on there, what you're saying is that first 30-minute period is more important, twice as important as every other period. So instead, the market is open. So 9:30 to 4 is 390 minutes. So you can look at a 30-minute time frame. There are 13 of those periods per day. Or if you look at a 65-minute, 65 times 6 is 390. So you've got 6 equal periods, Joel, rather than 1 half-hour period and 6 60-minute periods.
So Brian, right now, what charts are starting to look interesting to you? Any to the downside that you're seeing? Oh my God, this is getting way overextended. I mean, we have stocks at all-time highs, but it still feels like at least some of them still feel like there's got room to go. Do you ever look at the charts for short opportunities, or are you mainly going long?
No, I do. So I have a small short position in a stock called GIII, which is an apparel company,
Okay.
and they have, I looked at their revenues, I looked at their earnings, and they're starting to, they've flattened out. And a lot of these, you look at Nike and that, why has this stock held up when Nike is getting smashed? So that longer term chart looks like it has room to the downside. I'm short here for, like I said, with a small piece. I don't prefer to short, especially we're in a bull market. So I'm more interested in looking at what's emerging strength. And I think the biotechs are right there. If you look at the XBI, it keeps knocking at this level. And I think, this time, knock on wood, that we're getting ready to continue higher in the XBI. And I've got more biotech exposure than I have in a long time through a couple other individual names.
Yeah, so when
Oh,
you're doing the biotech exposure, you go in specific stocks, are you trading the XBI? How are you trading that?
Well, I look at the biotechs and I just kind of view them as kind of a toxic group in general, meaning, you see all these little stock. You look at, the morning, gappers up and down. Most of the time, the ones that are up 100% are some little biotech stock, but the ones that are down 60% are some little biotech stock, unprofitable one as well. So I like to look at the ones that, like Amgen, for instance, right now is looking ready to get going here, and that could help this group. I've been long a little one that is profitable called Target Therapeutics, TGTX. I've tweeted about that a couple times. They've got a new drug that they got approval last year. They had their first profitable quarter. They've got great estimates in here, and there's 26% of the float is short in here. So that I think these shorts are about to get roasted pretty good in this one.
who is it that shorts these stocks? Like who's sitting there in a biotech stock and got 26%, short interest here? It's a gutsy call because, like you said, these things can gap up 100% in your face. I'm always nervous. Like I'm a day trader and I will short stocks, but I don't short any small biotech stocks ever because I know even as a day trader, you hold something overnight and then boom, it's in your face. It's rare for me to short biotech stocks. It's a scary thing to short. Who do you think's on the other side? Like who is this? Hedge funds? People who know something? Like who's that 27%?
Someone who thinks they know something, but I mean, you look at the trend here. I mean, certainly you look at the history of the company in that bottom right corner. There's been good opportunities to be short this, but now you've got the stock. The company has a legitimate drug. The estimates are for 76 cents this year. So, going back to your question, Joel, how much do I look at the fundamentals? I know that they have a drug that people are excited about. They're earning money. The estimates are strong. They're growing market share, and there's a big short position. You add that all together with a good-looking chart. It just seems obvious here that this one should be able to continue to move higher. Now, I've been involved at lower prices, and I've actually just starting to scale out a little bit up in here and looking to replace if we get a nice pullback because, again, it's a biotech stock, and I don't fully trust it.
What would you, if someone was just starting trading, today, and they wanted to learn the basics of technicals, what would you have them start with, Brian?
I should say my book. But
Talk
the
up your
easiest.
book. Literally, talk up your book.
Um, okay, so my first book is Technical Analysis Using Multiple Timeframes, and that really allows you to look at what you're looking at on this screen, is recognizing that, people say, are you bullish or you bearish? Well, it depends. If you look at, this chart, we're lined up bullish on all these timeframes, but some other stocks, you'll look at them and you'll say, well, the longer term trend is down. Look at BABA. The longer term trend is down. The last couple days it's up. It's just a mess. Basically, there's no consistency of trend in here. The daily chart may be a little bit more neutral. Longer term, still in a downtrend. 30-minute time frame, we're perking up. So what is your time frame is something that's most important, because there's different messages here that so in that book, I spoke about the importance of knowing your time frame and getting those trends aligned, recognizing what stage we're in. So in BABA, for instance, on that monthly time frame, we're maybe in a stage 1 accumulation. And if we start breaking higher, this stock will have a lot of room to run. It will probably make a several year bull market. But right now we're in that phase on the monthly time frame. If they didn't scare you out on the way down, they're wearing a lot of people out.
They wear you out.
Yeah, and each of these rallies just gets kind of smacked down, but the range is compressing, and maybe the tide is going to turn here. So it's worth keeping on radar, and maybe as Dennis is doing, nibbling on it for that eventual turn, as it might be the cheapest stock in the world.
What are your thoughts on Tesla? And how do you approach something like Tesla technically when, obviously maybe, a week or two ago, it was a little easier when it's breaking out through 200, but now you go 200 to 260 in 6 trading sessions. How do you approach something like this if you're going to trade it? Or do you just stay away when it's moved up this much?
I nailed the entry at 187, I think it was, because it broke
Beautiful.
that range, and it broke above the year-to-date anchored VWAP. And I was thinking, hey, maybe we'll run to the 200-day moving average. And that was, a 15-point rally up to, 208 or so. Now I think you've got to, you look at it and people will look at this thing and say, hey, it's up too much. And they'll start talking about all the TSLQ arguments. They're bringing those back out. I look at it and say, the trend's your friend. Don't fight it, for sure. My thing on the 15-minute time frame is a 5-day moving average. As long as we're above a 5-day moving average, I would not go anywhere near this thing on a short sale, even for a scalp. So the trend is higher. Enjoy the ride, and if you're nervous about it, it's coming into potential supply on that monthly time frame. So tighten your stops, and then eventually we'll get a pullback. Maybe it pulls back to 230, starts to go sideways, and then we get another rally. But I certainly wouldn't be buying it for anything more than a day trade up here.
Brian, over the years trading, you have, different things that happen to you. Do you have like one trade or one series of trades that really like help frame your trading strategies, like maybe a big debacle or a big winner? Do you have something that like stands out to your mind? Once we like to give investors or traders, something to learn, something to lean on. Do you have something that comes to mind along those lines?
Well, I can talk about where, my losses have come from in general, is fighting trends. And as Dennis said, I look at a stock in a downtrend, and it's just poison. I've trained my mind, and it took a long time to get there, because I used to be, hey, look at how much that's down. That's a good company. And, I can get the bottom, and I'll average into it. I'll average more into it. I'll get way too big, and I end up puking the whole thing out with my largest loss of the year. And that happened to me so many times over the years. Or I would look at a stock like Tesla and say, hey, I'm a smart trader. I can pick the top in this thing. I can short it at, 230. Oh, shoot, it's at 232. Well, maybe I'll add a little bit more. And then it runs away from you. So, one of my mantras is don't buy the dip. and don't short the strength. Don't buy the dip, but buy strength after the dip. Let other people do the dirty work of finding that base, allowing it to turn sideways a little bit. You don't have to be the hero. Let the institutions who go in with hundreds of thousands of millions of shares, let them find the bottom in CMG for you. It's not here yet. We're still declining. We're still in pullback mode. So let them, and Dennis was saying he wants to see this stock turn sideways, do this hook that he was talking about, and let them do the dirty work. You don't have to get the bottom tick. And if you get the bottom tick, it just reinforces a negative behavior, because for every one time you get it, 99 times you're not going to. You're going to experience that pain, and your money could be better off in something else as well. So just don't fight trends is my main thing, especially for a newer trader.
Well, there you have it. Again, Brian Shannon joining us on Pre-Market Prep. I believe the first time ever, but we got to do this again, Brian. I know it's early for you, so we appreciate you getting up early and hopping on with us, but it was a lot of fun. Alpha Trends on Twitter, of course. And if you want to go check out his books, you can go give him a follow there. Brian, thank you again for joining us today.
Great to be on with you guys. Thank you for having me.
Thanks, Brian.